Imagine waking up tomorrow morning to find a letter in your mailbox that threatens to destroy your financial future. You tear open the envelope and see a cancellation notice from your home insurance provider stating they are dropping your coverage immediately. This is not a hypothetical scenario from a dystopian movie, but the cold reality facing millions of homeowners across the United States right now. You might think your mortgage payments are your biggest concern, but there is a silent crisis sweeping the nation that could leave your most valuable asset completely unprotected. Major insurance giants like State Farm and Allstate are quietly packing their bags and abandoning entire regions, leaving families exposed to financial ruin. We are about to embark on a cross-country road trip into the heart of the uninsurable zones to uncover the places where the American dream is becoming a financial nightmare. From the wind-swept plains of the Midwest to the sinking coastlines of the Atlantic and the fire-prone canyons of the West Coast, we are tracking down the zip codes where buying a house is a gamble you might not want to take. By the time we reach our #1 destination, you will understand why some experts are calling this the greatest threat to the housing market since 2008. Before we hit the road, make sure you hit that subscribe button and turn on notifications so you do not miss the crucial updates that could save your wallet. Let us start the engine and drive straight into the storm.
Number 10. Tulsa, Oklahoma. Our journey begins in the heart of the Great Plains, where the wind sweeps down specifically to tear shingles off your roof. You might associate this region with wide open spaces and affordable living, but beneath that calm surface lies a volatile weather pattern that terrifies risk analysts. Tulsa sits squarely in what meteorologists call Tornado Alley, and that geographical bad luck is costing homeowners a fortune. According to data from the National Association of Insurance Commissioners, Oklahoma consistently ranks among the top 3 most expensive states for home insurance in the entire country. While the national average for home insurance premiums hovers around $2,700 per year, residents in Tulsa are seeing quotes that are nearly double that amount. A report from MarketWatch indicates that Oklahoma homeowners pay, on average, over $4,500 annually for coverage. The reason is not just the catastrophic tornadoes that make headlines, but the relentless convective storms that bring damaging wind and hail. Insurance companies are paying out over $1.10 in claims for every $1 they collect in premiums in this state, according to industry reports. You're looking at a market where deductibles for wind and hail damage are skyrocketing to 2% or even 5% of the home's value. That means if your $300,000 home gets battered by hail, you could be on the hook for $15,000 before your insurance pays a single cent. Some carriers are now requiring cosmetic damage exclusions, meaning they will not pay to replace your metal roof if it is dented by hail but still functional. This effectively shifts the burden of thousands of dollars in repairs directly onto your shoulders. The frequency of severe weather events here has increased significantly, with the National Weather Service recording over 50 tornadoes in the state in a single active season recently. It is a market where finding a carrier is becoming a full-time job, and the costs are eating into home equity faster than almost anywhere else. If you live in Tulsa, let me know in the comments if your rates have jumped recently.
Number 9. Norfolk, Virginia. Leaving the wind behind, we drive east toward the Atlantic coast, where the water is rising faster than the insurance adjustments can keep up. You are now in a city that is quite literally sinking, while the ocean is simultaneously rising around it. Norfolk is home to the largest naval base in the world, but it is also ground zero for one of the most complex insurance puzzles in the United States. The issue here is not just a seasonal hurricane, but a phenomenon known as recurrent nuisance flooding that happens even on sunny days. According to the National Oceanic and Atmospheric Administration, sea levels in this region have risen more than 1.5 feet over the last century.
This slow-motion disaster has caused the Federal Emergency Management Agency to aggressively remap flood zones, forcing thousands of homeowners to buy mandatory flood insurance. A study by the First Street Foundation estimates that nearly 25,000 properties in Norfolk are at substantial risk of flooding today. That number is projected to grow to nearly 35,000 properties over the next 30 years as the water continues to encroach. Private insurers are looking at these topographical maps and running for the hills, leaving many residents with no choice but the National Flood Insurance Program. However, the cost of that federal program is changing under the new Risk Rating 2.0 system, which aims to reflect true actuarial risk. Some homeowners in this area are seeing their flood insurance premiums jump by 18% every single year until they reach the full risk rate. The Union of Concerned Scientists predicts that by the year 2045, nearly 10% of the habitable land in Norfolk will be chronically inundated. Real estate experts warned that home values in these flood-prone zones typically lag behind safer areas by nearly 5 to 10%. You are buying a property where the basement might effectively become an indoor swimming pool and the insurance bill rivals your mortgage interest. If you are house hunting near the water here, you need to check those flood maps twice.
Number 8. Charleston, South Carolina. We continue our drive south down the coast to a city famous for its historic charm and cobblestone streets. However, the southern hospitality in Charleston does not extend to the insurance market, which is becoming increasingly hostile to homeowners. This beautiful coastal city is sitting in the crosshairs of Atlantic hurricanes, and the financial fallout is hitting residents hard. The South Carolina Department of Insurance has reported that several private insurance companies have stopped writing new business in the coastal counties entirely. This exodus is driven by the soaring cost of reinsurance, which is the insurance that insurance companies buy for themselves to survive catastrophes. Reinsurance rates have spiked by as much as 50% globally in recent years, and those costs are being passed directly to you. According to Policy Genius, the average cost of home insurance in South Carolina has risen to over $2,500 a year, but in coastal Charleston, quotes of $6,000 or more are becoming the new normal. A local report highlighted that some homeowners on the barrier islands have seen their premiums triple in just the last 24 months. The risk is compounded by the fact that a direct hit from a major hurricane could cause tens of billions of dollars in damages. CoreLogic analysis shows that over 200,000 homes in the Charleston metro area are at risk of storm surge damage. The reconstruction cost value of these at-risk homes is estimated to be over $55 billion. Furthermore, the state legislature has had to intervene to prop up the market, similar to what we see in Florida, because the private sector simply cannot make the math work. If you own a historic home here, you are facing a double whammy, because insuring older structures against modern windstorm codes is astronomically expensive. You might find yourself in a situation where you have to choose between preserving history and protecting your bank account. Before we head inland, make sure you share this video with anyone looking to retire in the Carolinas. Number 7. Denver, Colorado. We are turning the steering wheel west and climbing in altitude to the mile-high city. You might think being a mile above sea level protects you from climate disasters, but Denver is facing a different kind of burning crisis. The threat here is wildfire, and it is no longer confined to the remote mountain forests. The Marshall Fire in late 2021 changed everything when it tore through the suburbs, destroying over 1,000 homes in a matter of hours. That event proved that urban and suburban neighborhoods are now on the front lines of wildfire risk. As a result, insurance companies are using satellite imagery and artificial intelligence to assess the wildfire fuel around your home. If you have too many trees or a wood-shake roof, you could be dropped instantly. According to the Colorado Division of Insurance, recently homeowners in wildfire-prone areas have reported premium increases of over 100% in a single renewal period. Some residents are receiving non-renewal notices stating that their fire line score is simply too high for the carrier to accept. It is estimated that over 70% of the population in Colorado lives in the wildland-urban interface where human development meets combustible vegetation. Besides fire, Denver is also known as the hail capital of the United States, receiving more hail claims than almost any other city. State Farm data shows that Colorado consistently ranks in the top 5 states for hail loss claims, with damages often exceeding hundreds of millions of dollars annually. The average home insurance premium in Colorado has surged over 40% in the last 5 years, outpacing inflation and wage growth. Many carriers are now limiting coverage for roofs to actual cash value rather than replacement cost, meaning you pay the depreciation. You are living in a beautiful landscape that unfortunately wants to burn down or smash your roof with ice balls every summer. Hit the like button if you have ever had to replace a roof due to hail.
Number 6. Houston, Texas. We are driving south again to the energy capital of the world, where everything is bigger, including the insurance premiums. Houston is a city that has been battered by a biblical sequence of disasters in the last decade. First, there was the devastating flooding from Hurricane Harvey, then the crippling winter freeze of 2021, and most recently, Hurricane Beryl. The insurance market in Texas is currently in a state of upheaval that rivals the crisis in Florida. According to the Texas Department of Insurance, homeowner premiums in the state have jumped by an average of 22% in just 1 year. Houston residents are finding that their policies are excluding wind and hail coverage unless they pay a separate hefty deductible. S&P Global Market Intelligence reports that insurance companies in Texas posted a net underwriting loss of hundreds of millions of dollars recently, prompting them to tighten guidelines. You're seeing major carriers restrict new business in specific zip codes that are prone to flooding or grid failure damage. The National Flood Insurance Program has paid out more claims in Texas than almost any other state, and premiums for flood coverage are rising steeply. A study by the Insurance Council of Texas found that Texas has the highest number of weather-related major events of any state in the country. Homeowners here are also dealing with the aftermath of litigation abuse, where lawsuits against insurers drive up costs for everyone. It is not uncommon for a homeowner in Houston to pay $5,000 or more annually for a standard policy that still leaves gaps in coverage. The freeze event alone generated over 500,000 insurance claims, making it the costliest winter storm disaster in the history of the state. You essentially have to insure your home against both tropical heat waves and Arctic blasts in the same calendar year. If you are in Houston, check your policy renewal date right now because the price shock is real. Number 5. Los Angeles, California. We continue our journey west to the land of Hollywood dreams, which is quickly becoming an insurance desert. Los Angeles is the epicenter of a massive pullback by the largest insurers in the nation. In May of 2023, State Farm shocked the industry by announcing it would stop accepting new applications for homeowners insurance in the entire state of California. Allstate soon followed suit, pausing new policies and leaving millions of residents wondering who will protect their homes. The primary culprit is the terrifying risk of wildfires in the canyons and hills that surround the Los Angeles basin. However, the crisis is also driven by state regulations that have historically capped how much insurers can raise rates. Insurers argue that they cannot price the risk accurately, so they are choosing to leave the market entirely. According to the California Department of Insurance, the number of homeowners forced onto the FAIR Plan, which is the insurer of last resort, has more than doubled in recent years. The FAIR Plan offers less coverage for a much higher price, often costing 3 or 4 times what a standard policy would. You are looking at median home prices over $900,000 in Los Angeles, and protecting that equity is becoming impossible for some.
CoreLogic estimates that over 1 million homes in the greater Los Angeles area are at moderate to extreme risk of wildfire damage. The reconstruction cost for these properties exceeds hundreds of billions of dollars, a financial exposure that insurers are frantically shedding. Even if you do not live in a high fire zone, you are seeing premiums rise as the pool of available insurers shrinks. 7 of the top 12 largest insurance groups in California have either paused or restricted new business. You might have the money to buy a mansion in the hills, but you might not find a company willing to insure it. Subscribe to the channel if you think the state government needs to intervene more aggressively here.
Number 4. Lake Charles, Louisiana. We head back to the Gulf Coast to a city that has become the punching bag for Mother Nature. Lake Charles is a stark example of what happens when a market completely collapses under the weight of repeated catastrophes. In 2020, this city was hit by Hurricane Laura, a Category 4 monster, and then 6 weeks later it was struck by Hurricane Delta. The devastation was total, and the insurance fallout was immediate and brutal. Since those storms, more than a dozen insurance companies that operated in Louisiana have been declared insolvent. That means they went bankrupt and left thousands of claims in limbo, forcing the State Guarantee Association to step in. According to Louisiana State University researchers, insurance premiums in this area have increased by large percentages since the storms. Many residents in Lake Charles simply cannot find private coverage at any price. They are forced to rely on Louisiana Citizens Property Insurance Corporation, the state-run insurer of last resort, which is mandated by law to be more expensive than private options. The average premium for a Citizens policy can exceed $5,000 a year for very basic coverage. You drive through neighborhoods here and still see blue tarps on roofs years after the storms because payouts were delayed or denied. The population of Lake Charles actually declined by over 6% in the years following the hurricanes, partly due to the housing and insurance crisis. FEMA has spent billions in this region, but federal aid cannot replace a functioning private insurance market. You are trying to rebuild a community where the financial safety net has been shredded to pieces. It is a heartbreaking reality that shows how fragile the system really is. Drop a comment if you remember seeing the footage of Hurricane Laura.
Number 3. Santa Rosa, California. We returned to California, but this time we are heading north to wine country. Santa Rosa was the site of the Tubbs Fire in 2017, which at the time was the most destructive wildfire in the history of the state. That fire destroyed over 5,000 structures and wiped out entire neighborhoods like Coffee Park. Today, the physical scars have mostly healed, but the financial scars on the insurance market are fresh and bleeding. Homeowners in Santa Rosa are receiving non-renewal notices at an alarming rate, even if they have cleared vegetation and hardened their homes. A report from the Bay Area News Group found that in some zip codes in this region, the non-renewal rate jumped by over 30% in a single year. Insurers are using sophisticated risk modeling that marks entire zones as uninsurable due to slope and access and wind patterns. You could be paying $8,000 to $10,000 a year for a policy that used to cost $2,000. Real estate agents in Santa Rosa report that deals are falling through at the last minute because buyers cannot secure fire insurance. The cost of rebuilding here has also skyrocketed, pushing replacement cost estimates through the roof. Verisk data indicates that construction costs in California are significantly higher than the national average due to labor shortages and material prices. This means your coverage limit needs to be higher, which further drives up your premium. Some residents are choosing to go without insurance entirely, which is a terrifying gamble known as going bare. Industry estimates suggest that the number of uninsured homes is creeping up as affordability reaches a breaking point. You are sipping wine in paradise, but you are sleeping on a financial powder keg.
Number 2. New Orleans, Louisiana. We are approaching the end of our road trip, and we find ourselves in the Big Easy.
New Orleans is a city defined by its geography, sitting largely below sea level and surrounded by levees. The risk here is existential, and the insurance market reflects that terror. Following Hurricane Ida in 2021, the insurance crisis in New Orleans went from bad to catastrophic. According to Bankrate, Louisiana has the highest average home insurance cost in the nation, surpassing even Florida in some data sets. Homeowners in New Orleans are regularly seeing premiums of $6,000 to $8,000 annually. The dependency on the state-run Citizens insurance is dangerously high, with Citizens holding over 100,000 policies across the state. Because Citizens is so overwhelmed, they have had to raise their own rates by over 60% recently to remain solvent. You also have the issue of high deductibles for named storms, which could be 5% to 10% of the home value. Redfin reports that insurance costs and climate risks are driving some residents to leave the city entirely, causing a migration shift. The cost of flood insurance is also uncapped for many historic properties that were previously subsidized. A report by the Greater New Orleans Housing Alliance warns that rising insurance costs are the single biggest threat to affordable housing in the city. Landlords are passing these massive insurance hikes on to renters, driving up the cost of living for everyone. Insurers are pulling out, not just because of the storms, but because of the legal environment and claim severity. You love the culture and the music, but the monthly housing payment is becoming unsustainable. Stay with me, because our number one location is the absolute worst case scenario.
Number 1. Miami, Florida. We have arrived at the final stop on our journey, the ground zero of the global property insurance crisis. Miami is the poster child for everything that can go wrong in the housing market. You have the perfect storm of hurricane exposure, rising sea levels, rampant litigation fraud, and expensive real estate. The average home insurance premium in Miami is staggering, often exceeding $10,000 per year for a standard home. According to the Insurance Information Institute, Florida accounts for nearly 80% of all homeowners' insurance lawsuits filed in the United States, while only having 9% of the claims. This rampant legal fraud has driven dozens of insurers out of the state. Farmers Insurance recently announced they would stop offering policies in Florida, affecting 100,000 customers. Most homeowners here are forced onto Citizens Property Insurance Corporation, which has become the largest insurer in the state with over 1 million policies. Regulators have warned that Citizens is financially unstable, and if a major hurricane hits, all Florida policyholders could face a surcharge or a tax to bail it out. You are seeing condo associations in Miami facing massive assessments because insurers are demanding new roofs and impact windows before offering coverage. The cost of living crisis here is exacerbated by the fact that you are paying 4 times the national average for insurance. A recent Zillow report highlighted that insurance costs are a major reason why inventory is piling up in some Florida markets as buyers get cold feet. Scientists warn that Miami is facing the most asset value risk from climate change of any coastal city in the world. You are buying a ticket to a beautiful sinking ship where the entry fee doubles every few years. This is truly the most dangerous place in America to insure a home.
We have traveled across the country and seen the devastation firsthand. The insurance crisis is reshaping the American housing market, and it is something you cannot ignore. If you found value in this road trip, please hit the like button and share this video with a friend who owns a home. Do not forget to subscribe and leave a comment below telling me which city you think is next on the list. Thank you for watching, and I will see you in the next video.